Back with Rebecca Walser on this, Gary Kalpam on this. We'll get into the particulars of what happened and whether it goes beyond mental fatigue, guys. But Rebecca, the first thing that occurs to me, will it hurt or give at least some trepidation going into what is normally the busy late winter, spring travel season here? In other words, will people think twice? It could be just me, guys. I'm not hearing. Are you? I'm not hearing Rebecca. I apologize, Rebecca. I'm going to go to Gary on that. It was we'll fix these bugs here. But Gary, let me get the same question to you. Will this put a crimp on travel, or at least give people pause at the worst time?
Well, it certainly doesn't help when it's on the news and when you're seeing things drop from the sky. And airlines are still flying at about 40% of the norm because of the pandemic. But I think there's momentum going forward for people getting back out there. And as long as this doesn't happen again, I think we're going to be okay. And I will tell you, the strongest group in the market near term are the airline stocks and the travel stocks as the COVID continues to crash in numbers and in hospitalizations. So I think we'll be okay as long as we don't see another event like this happen.
Rebecca, to his point, we are seeing, and I think everything's okay with your mic now, but we are seeing it in some of the early guidance we're getting from the airlines, even some of the big hotel and even the casino operators, who are very optimistic that things will certainly be better than they have been, which is a low bar. But what do you make of that?
Yes, very low bar, Neil. I'm just glad to get people back in the air. And you know, it's all of these things are always tragic when they happen. But if you look at the statistics of flying, it's obviously one of the safest methods of transportation. And we definitely can't, like I've been saying, like a broken record, you know, we can't stimulate our way indefinitely out of this problem. We need people to get back in the skies. We need people to take cruises again. We need the business conferences to come back. I'm tired of being told we can't have this business conference except for virtually. I'm ready to go. So let's get people moving again and getting back to a normal life. I know that that's so cliche, and I apologize, but don't let this stand in your way of having a great 2021. Go on vacation with your family. Get back to life.
What if you want to go on vacation away from your family? I guess that's a whole separate issue. But, you know, guys, as you're speaking here, I'm getting more and reading more of the comments that Jerome Powell made. And I know this is sort of like a weird insight of mine, but his openness to keep buying more bonds as the economy improves, is that his way of saying the economy will indeed improve? That's at a minimum. He seemed to telegraph that. But that maybe it's a way for him to force down those bond yields and you know, force the issue if the economy won't. What do you think, Gary?
Let me take the other side of that, Neil. He's telling savers, I'm paying you nothing, and because I'm buying up bonds and lowering those yields, you're going to get less of a yield and pay a higher price. To me, this is just complete distortion of price and yield, and I pray and I keep my fingers crossed that I am wrong, that one day the market wakes up and says, wait a minute, this bond should be yielding 8%, not 4%, because Jay Powell is buying up the bonds. There are so many companies that are yielding hardly anything. Junk bond yields are at their lowest ever, while their debt is at the highest ever. We're talking about economics 101 turned on its head because of a man that's not accountable to anything, that can print as much money as possible to do his bidding on rates. And again, long term, I am so worried about this. And again, I hope I am wrong, but I think there's a comeuppance to come eventually.
Well, that might be, but he's certainly putting that in the far future, Rebecca. Another quote from the Fed chairman, it says, the economy is a long way from our employment and inflation goals. He's talking about the Fed's employment and inflation goals, and it is likely to take some time for substantial further progress to be achieved. To me, that indicates that even looking at inflation, even at looking at the uptick in commodity prices, he is not going to change a thing. Now, normally the markets would react to that and hear, great news. Why aren't they today?
They're baking this in, Neil. This is what happens when you have just an aggressive stimulus policy with the Fed when your economy shut down. So the market is expecting now. I mean, he already forecasted. He already said 120 billion purchases a month. He already told us that a month ago. So the market has baked this in now, and the only thing that's going to really make us have a sheet change is if he starts saying, "Oh, wait a minute, I'm worried about inflation," and he starts saying something different. If he keeps saying the same things, unfortunately, Gary's 100% right, and he's not going to be wrong because this is basic economics. We cannot stimulate and spend money faster than we are organically creating an economy, which is what is happening the last year, this year. How long into the future it lasts is anybody's guess, because this is untested monetary theory where we can just spend into perpetuity and there's no repercussions. And we're already seeing repercussions, Neil. That's why we had the yield curve steepen this past 2 months. So we are already seeing it, and we have got to get the economy organically reopened, and people have got to get comfortable again to go back out and spend money. 70% consumer-driven economy, and we're not spending. Well, we're spending, but you understand what I'm saying. We're not traveling. We're not doing our normal concerts and sporting events. So we've got to get back to a normal. I hate to say that, but it's true. And Gary's right. Gary's right. If this doesn't change and we don't get back to some sort of normal stimulation of just regular markets, we're going to be in a big world of trouble in this country. And this is all happening, Neil, as you know, I like to mention, with the boomers retiring. I mean, 2022 to 2027, we've got 50 million people retiring. This is happening, folks. We're here.
You keep talking about retiring when you're on my show, or like, and you're looking at me as you're saying it. It kind of weirds me out. No, guys,
Never
great job,
retire,
guys.
Neil.
By the way, I know, right? Bad news. Some can force that on you, though, Gary. In the meantime, you're, to the point that Rebecca was making about what will happen when we get back to public venues. The good news in the New York metropolitan area is that they are going to get back to Knicks and Nets games. That's the good news. The bad news is